Can you imagine working all your life at a job and paying into the government, and then when you finally reach that critical age that you can finally retire and give up your job, there's nothing there to pay you back to keep you going. You have to keep your job. Social Security is always diminishing. It just keeps going down. Keplinger's personal finance says that married couples that draw more than $32,000 in Social Security are forced to pay 50% of it in taxes. The problem with that, I mean, they're not making enough to actually be able to pay all that back, and with the way the economy is going up and everything's becoming more expensive, it won't work. The way I suggest going is investments, going into investments. I've been investing for 4 years, and I also have a financial advisor that I talk to quite a bit. I plan to tell you today about some beginning investments that you can do, as well as some stepping stones to get into more risky investments. Some beginning investments are something so simple as a savings account. A savings account has a small interest rate. It builds a little bit of money, but the idea is building money with your own money. It has almost no risk, but it also has very low potential. Another example of this would be a CD, a certificate of deposit. The only problem with this, it takes a little bit more to start it up. It has a higher starting rate, but it also has a higher interest rate, which means you can also make more. The risk is almost nothing as well with that. However, if you wanted to make more money, if you're looking to make more money, you also have to have more risk. You have to be willing to lose more money to make some. What most people think of when they think of this stuff is stock markets. Stock markets have a bad reputation these days because of how they're slowly going down and becoming worse. However, what most people don't realize is that about every 10 years this tends to happen. They tend to go down, but then they also rebound. They say that if you keep your stocks invested for 10 years, that you tend to have 100% profitability. What most people do is 401ks. It's usually with their business or the company they work for. It takes it directly out of their check automatically every month. They don't have to worry about doing it on their own, so they aren't tempted to spend it somewhere else. And then also most companies will actually match what you put in there. So you tend to get 2 to 1 on what you actually put in. It gets directly invested in the stock market, dispersed among many different things, and it keeps it very stable. It's said by Dan Kodak that you're supposed to spread your stocks across, or you're supposed to spread your investments across many things, usually about 50% in stocks, about 40% in bonds, and then the other 10% you want in a savings account that's very steady. The other thing you can do is the stock market, just directly from your own experience or with a financial advisor. The risk is a lot greater, as with 401k has a slight bit more risk. However, the stocks have the greatest risk. But what most people don't realize is when you buy a stock and the price of the stock drops from where you bought it, you haven't actually lost money. The only time you lose money is when you sell that stock at a lower price. If you keep the stock and it raises back up to above to where you were and you sell it, you've made money no matter what's happened in the past. The potential is a lot greater with stocks because you can diversify it among what's popular in that day and age and what can be growing the fastest at that time. You want to make sure you cover yourself before you worry about spending your money on little things that just make you happy. You want to make sure that your future's covered. Investment advisor Anna Repetort says that today, out of couples, just about all of them, at least one of the partners will live to the age of 80. The lifespans are increasing all the time. They say that by the year 2045, out of couples, at least one will hit the age of 100. 1 out of 4 couples will have that. So therefore you have to have your own investments. There's no way that the government's going to be able to cover you with Social Security. You can't let others determine how long you want to work. You have to leave that in your own hands. And I strongly suggest using investments to do that and secure yourself in that position.